I'm Richard Southern in the 680 newsroom with a look back at the big business news stories of the past week. It was a money-losing week for Bay Street. Oil played a role. It finishes April below $50 per barrel, but certainly the big story was Home Capital Group, and this is one of Canada's largest mortgage lenders. In fact, it's Canada's biggest non-bank lender, and it imploded on Bay Street this week. The stock tumbling 64% on Wednesday following allegations of misconduct. It's not just Home Capital. A lot of similar publicly traded mortgage lenders here in Canada have seen their stocks drop sharply over the past 12 months. And the reason is they're facing a liquidity crunch. Their capital for subprime mortgages is drying up. Some think this could be a red herring as far as the Toronto housing market is concerned. Is it the beginning of the bubble bursting? That is the question. Had the Ontario budget tabled this past week, and it was a balanced budget, the first one for Ontario in about a decade. But boy, it was big on spending. $11.5 billion over 3 years for health care, $9 billion to build new hospitals. And the centerpiece of the budget was the fact that everyone 24 years of age and under will get all their prescription drug costs covered. And that could be bad news for the insurance companies, but good news for the rest of us. Our premiums likely to drop as a result. If you're an OSAP student, if you have an OSAP loan, you won't need to begin repaying that until you're making $35,000 a year. And smokers are going to have to pay more. The Ontario government has already put up the price of a carton by $2. It's going to go up by $10 over the course of 3 years. Well, run for the border. Taco Bell this week announced a big Canadian expansion. It's planning to triple its Canadian restaurant count over the next 10 years. It has 170 stores now. It's aiming to have 700 open 10 years from now. And what's more, they're going to start selling beer. Yeah, how does a beer with your burrito sound? Taco Bell has teamed up with Labatt to bring brews to some of its Canadian locations. Well, opening up this week was the so-called Museum of Failures in Sweden. It highlights some of the worst products ever to make it to market, products that failed pretty quickly. Things like Coca-Cola Black. This was a mixture of Coke and coffee, debuted in 2006. People weren't digging the taste of that. Bic pens for her. These were promoted as, quote, designed to fit comfortably in a woman's hand. That didn't go over very well back in 2008. Neither did Colgate lasagna, a microwavable beef lasagna from Colgate. Consumers weren't ready to buy lasagna from a toothpaste company. Nokia's N-Gage was the poster child for poor design when it came out in 2003. It was a combination smartphone and gaming system, but look how you had to hold it to talk. Not the greatest. The Trump game is in the Museum of Failures. It was a Monopoly-style board game, didn't do very well. And Harley-Davidson perfume. Who would have thought that the bikers didn't want to buy perfume? Speaking of maybe product failures, Nordstrom this week made all sorts of headlines by selling these jeans with fake mud on them. The price tag, $425. Nordstrom said, quote, it shows you're not afraid to get down and dirty. Any question why such a product even exists? In the 680 newsroom, Richard Southern, City News.